Unstoppable. Relentless. It's the ironclad investment discipline.
How do you know you have the right financial advisor? In this short video, I'm going to share 10 questions you can ask yourself as a way of testing and giving yourself a score as to whether or not you've got the right financial advisor. So in no particular order. Number one, do you like the person that's managing your wealth? You don't have to hang out with them socially, but I think it's important that you at least like the person that you've entrusted your life savings to. Number two, are you dealing with a financial advisor that's a good communicator? This business, wealth management business, is often complex. Having somebody be able to distill that down into a way or a format that you understand is extremely important. If you're getting that, check mark. If you're not, red flag. Number three, does your advisor show the performance of your investments in some kind of consolidated fashion? If they're showing you how your individual accounts, your RSP, your tax-free savings account, your holding company, if they're showing you how each of those individual accounts are performing, A, they're required to do that by law, but B, it doesn't tell the whole story. You want to have a consolidated report. I mean, if you've got an RSP worth $500,000 and a holding company worth $1 million, and your RSP goes up 5% and the holding company goes down 10%, how do you make heads or tails about how your money's really performing? So having some kind of report that puts all of your accounts together and shows you how your money's performing net of any money you put in or took out, net of all fees, over a 1, 2, 3, 5, 7, 10-year basis. How much money have you made since becoming a client of that advisor? Super important. If you're getting that, check mark. If not, red flag. Number four, you've got a written financial plan, and that financial plan's updated at least once a year. The plan, even if you're retired, would show you, here's what we have now, here's our net worth, value of real estate, investments, businesses, etc. Here's a rate of return, based on the types of investments that we own, projected out to your life expectancy so you can see what your net worth grows to, gives you planning opportunities. It would show you your forecasted taxable income compared to your taxable income now. Are there opportunities that tax minimization strategies that come out of that? Likely. So super important having a written financial plan. If you've got that, I give that a check mark. If not, red flag. Number five, the administration of your investments or your money is done with impeccability. Financial advisors don't have control over what happens to the stock market. So they better have control, take care of everything that they have control over. So managing the administration of your money is super important. And I'll give you a couple of examples, just a few to name a couple. They've topped up your tax-free savings account proactively every January. They've helped you figure out proactively how much money you should put in your RSP or how much you should take out of your RSP if you're at that stage of life and it makes sense to do that. So a simple litmus test. Is your tax-free savings account topped up right now? If it's not, and unless there's a good reason, and sometimes there are good reasons for it to not be topped up, but if there's no good reason, you've got your answer. That would be a red flag. Number six, your advisor is a discretionary money manager, meaning you've granted them the ability to do what needs to be done in a timely manner with your investments without you having to be involved. If you're dealing old school stockbroker who's got to call you to get your permission every time they want to make a change to your portfolio, model's broken. It gets you exponentially higher chances that you're going to make an emotional mistake because you're going to be, I don't want to own that stock, or I really want to own this stock. Let the advisor do what needs to be done. And if your advisor runs a big business, which I would argue you want to deal with someone who's got experience and runs a big business, if they've got 300 clients or even 200 clients and they need to make a change because the stock's gone up in value and they want to trim a little bit of that and rebalance and add to something that maybe has gone down, they're not going to have time to call 200 clients from A to Z. It's not feasible. It can't be done. So I would put, if you're dealing with an old school broker or you're not discretionary, a big red flag. Number seven, you've got an advisor that's been in the business for a minimum of 10 years. I'd like to see more, but that would be the bare minimum. There's just valuable lessons that advisors learn old school by going through crummy markets it just becomes invaluable lessons. So if you've got someone who's less than 10 years in the business, I put that as a red flag. Number 8, if they don't have a website, or their website looks like it's from 1994 when we first all learned how to have a website, I'm going to put that in I don't take my craft too seriously category, and I would flag that as a red flag. And simple litmus test there: Google your advisor and see what comes up. Number 9, all your advisor talks about is investments. If they start your review meetings about, I want to buy this or sell this, or just talking about the investments, the business has morphed. When I started 30 years ago, we would sell some mutual funds and we would send a client a monthly statement, and that was the extent of our relationship. It's morphed into estate planning, tax planning, insurance planning, buy-sells for our agreements for our business owners. A good financial advisor is going to be bringing resources to you to help plan those type of events, as opposed to just investments. Again, if you're not getting that, red flag. And then the last one is you meet with your advisor on, number 10 is meeting with your advisor at least once a year, either remotely through a virtual meeting or personally, or someone on the advisor's team. Things change, your situation changes, and the only way the advisor can make changes to your wealth plan is if they're kept abreast of what's happening in your, the life cycles of life. So having a regular review meeting, if you're not getting that, and if you're not getting that because your advisor reaches out to you and you just don't get back to them, and I've got a few of those clients, that's not on your advisor. But if your advisor is not reaching out to you at least once a year to set up that kind of review, I'm going to put that in the red flag category. So there you have it. There's your little test that you can take. If you're not getting a 6 or 7 out of 10 minimum, I would argue you're probably not dealing with the right financial advisor. But let me close by saying, being completely candid, obviously I wouldn't share these things if this wasn't 10 things that I was offering to our clients. So a couple things I'll say about that. 1, if you're a client watching this, hopefully it's a gentle reminder of what we do for you behind the scenes. And 2, if you're not a client and you're not getting these things, obviously I'd love the opportunity to try to earn your business. In the meantime, I hope that this has been helpful in determining whether or not you are with the right financial advisor, and I appreciate you watching my video.